What if everything you've been taught about money is about to become irrelevant? What if the cash in your wallet, the digits in your bank account, and even the systems governments use to control economies are all on the edge of becoming obsolete? And what if the replacement isn't coming someday in the future, but is already here, quietly growing, silently reshaping global finance while most people still think it's a scam, a bubble, or a game? Because somewhere between financial chaos, political uncertainty, and technological revolution, Bitcoin emerged, not as a currency, not as an investment, but as a question powerful enough to challenge the entire structure of modern money. Today, we're going to explore whether Bitcoin is truly the future of money or just another fantasy destined to collapse. And to understand the answer, we need to start before Bitcoin existed. Before Satoshi, before mining, before the blockchain, back at the very origins of money itself. For thousands of years, humans used one simple idea to survive: trust. We trusted shells, we trusted beads, we trusted gold, kings, empires, and finally, we trusted banks. But every step forward, gold solved scarcity but created control. Banks solved convenience but created dependence. Government solved stability but created inflation. And by the early 2000s, something strange began happening. Global debt exploded. Bank bailouts became normal. Currencies lost buying power, people lost trust, and during the 2008 financial crisis, one anonymous figure or group, known only as Satoshi Nakamoto, released a 9-page document that quietly declared war on broken financial systems, a system no government controls, a currency no bank can print, no one can shut down. But this wasn't just technology, it was a rebellion. And the story of Bitcoin begins exactly there. The year's 2008. Banks across the world are collapsing under their own greed. Millions lose their homes, governments print trillions to save the system and bail out the people. And then, on an obscure mailing list, a message appears: "I've been working on a new electronic cash system that's fully peer-to-peer with no trusted third party attached." The Bitcoin white paper. This wasn't just a blueprint for digital money. It was a challenge to the very idea of financial control. Satoshi wasn't trying to build a better bank. He was trying to build a world without banks, a world where your money couldn't be frozen, couldn't be inflated, couldn't be manipulated by politics, and couldn't be created out of thin air. Bitcoin's fundamental idea was radical. Only 21 million will ever exist. No bank can change the rules. Every transaction is verified by thousands of computers, and the system belongs to no one and therefore belongs to everyone. But an idea is only powerful if people choose to believe in it. And at first, almost no one did. Rise from worthless code to global hedge asset. In the early days, Bitcoin was a joke. Literally, 10,000 Bitcoins were once traded for 2 pizzas. The world dismissed it as nerd money. But slowly, something changed. People living under authoritarian governments began using Bitcoin to escape capital controls. People in countries suffering hyperinflation, Venezuela, Lebanon, Argentina, used Bitcoin to preserve wealth when their currencies collapsed. Tech pioneers saw the potential of blockchain beyond money. Investors saw an emerging digital gold. And by 2017, Bitcoin wasn't a toy anymore. It was a movement. Its price soared from a few dollars to thousands to tens of thousands. Governments panicked. Banks panicked. Regulators scrambled to understand what was happening because for the first time in modern history, money existed without permission. But then, as always, the story took a turn. Breaking point, the crashes that should have killed Bitcoin. Between 2013 and 2020, Bitcoin experienced multiple catastrophic crashes, 85% drops, exchange hacks, government bans, environmental accusations. Media saying Bitcoin is dead over 450 times. If any normal asset would have been destroyed. But Bitcoin didn't die. It survived. It recovered, and every time it came back, stronger. Why? Because every crash removed speculators and left behind true believers, developers, builders, institutions, and nation-states. Yes, nation-states. In 2021, El Salvador became the first country to adopt Bitcoin as legal tender. Millions of people who never had bank accounts suddenly had digital wallets. For the first time, Bitcoin wasn't just an asset, it was becoming a part of global financial infrastructure. But with growth came new challenges. As Bitcoin rose, governments realized something terrifying. If Bitcoin becomes money, they lose control of monetary policy. They lose the power to inflate debt away. They lose the ability to freeze assets, and powerful institutions do not surrender power easily. So began the counterattack. Strict regulations, tax complications, attempts to create government cryptocurrencies known as CBDCs, media campaigns labeling Bitcoin as risky, banking barriers restricting crypto transactions, environmental debate. But here's the twist. None of this stopped Bitcoin. In fact, it accelerated adoption because the more governments tried to control money, the more people began to seek alternatives. And this leads us to today. Governments are printing faster than ever. Global debt has passed $330 trillion. Inflation across countries is hitting multi-decade highs. Currencies are losing value at speeds not seen in generations. The US dollar lost 96% of its purchasing power since 1913, 30% in the last 2 decades, 7 to 10% in the last few years alone. Meanwhile, Bitcoin, despite volatility, has averaged over 100% annual growth for more than a decade. And now institutional giants BlackRock, Fidelity, Vanguard are entering the market. Bitcoin was created as a solution to broken money, and ironically, the failures of modern financial systems are pushing people toward it faster than ever. Which leads us back to the question, is Bitcoin the future of money? Let's examine 3 patterns. Whenever trust in governments falls, Bitcoin adoption rises. From Turkey to Nigeria to Argentina, people facing inflation turn to Bitcoin. Whenever banks restrict withdrawals, Bitcoin's value increases. Cyprus, China, Lebanon, Nigeria, whenever currencies collapse, Bitcoin becomes a lifeline. Venezuela's inflation, 10,000%. Bitcoin's inflation, 0 and decreasing. The pattern is clear. Money with unlimited supply loses value. Money with limited supply gains value. Bitcoin isn't perfect. It's volatile, misunderstood, and still maturing. But so was the internet in the 1990s. And today, the internet runs the world. So the real question isn't, is Bitcoin ready to replace money? The real question is traditional money still capable of surviving the future? 1. Bitcoin is not just currency, it's a financial rewrite. It challenges the idea that governments should control currency. 2. Bitcoin thrives when trust in institutions falls, and trust is falling globally. 3. Even if Bitcoin doesn't replace money, it will reshape it. Just like the internet reshaped communication, Bitcoin and blockchain are reshaping financial systems, a once-in-a-century shift. The battle for the future of money has already begun, and whether Bitcoin becomes the new standard or not, the world that emerges will not look like the world we know today. The worst thing you can do right now is ignore what's happening. If you want to understand the financial revolution shaping our